please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
One stock which is surging, by the way, right now is Sun TV. I mean, it's a stock which is really in strong hands right now. And just see the intraday chart of that one, and has taken out yesterday's high and is making new intraday highs. Ashwani Gujral, Mitesh Thakkar and Rajat Bose with us now. Ashwani, thoughts on first 45 minutes of trade? I mean, pretty flat. And in terms of individual stocks, what's looking good?
Well, with the economy packing its bags, no wonder VIP is doing well. Anyway, the bulls have failed to capture yesterday's close. So my sense is that from here it's easily possible that we go towards yesterday's low, which is about the levels I spoke of earlier, 24,950, 970, or maybe on the Nifty 10,130 thereabouts. So for the moment, I don't think there is too much positivity or continuation of yesterday's upside, because we should have at least crossed yesterday's close. But there are individual stocks which are doing well. So BEML seems to be moving strongly on the upside. This is a buy with a stop of 1870, target of 1910. V-Gaurd is a buy with a stop of 197, target of 212. And JP Associates seems to be falling further, so that's a sell with a stop of 18, target of 15.
Oh, yes, that's a
Well, I just had a point on, Ashwani, you saying that the market has not been able to transcend yesterday's high. The point is it's also not fallen so much. Therefore, will the short still work?
See, if I am a bull since yesterday, high prices to move higher.
Okay.
And if not moving higher for an hour, couple of hours, I will start getting jittery and I will quit my positions, and that will get the market lower. The idea is, if a fresh breakout has happened, you need to, get to fresh levels instead of seeing selling. If you see the number of sectors which are positive, out of like 15 sectors, hardly 4 sectors are positive.
Okay.
On the bank Nifty, just Kotak Mahindra, HDFC Bank, and barely, IndusInd Bank is positive.
Okay.
This is not the kind of market action you want to see to new highs. You want strong stocks to participate.
Okay, Ashwani, just a word on some of these FMCG names doing well, Colgate, Dabur, anything here?
See, consumer stocks for the last couple of days have started moving. Maybe it's festive season, etc. But Hindustan Lever, you could expect 1300, 1320. Similarly, Colgate, 1250 thereabout should come in. So overall, I think maybe it's defensive, maybe it's festive season, but definitely consumer and FMCG is doing much better than other sectors.
Okay, let's bring in Mitesh as well. Mitesh, your thoughts on what's a really lackluster sort of start, about 7 lower. And for what it's worth, Tata Motors has put on more than 4%.
I think Tata Motors is seeing some continuation, but my sense is that I think, at slightly higher levels, I do expect supply to emerge. Overall, I think the stock can possibly head towards levels of 430, 435, which is where I think if there are any long positions, I think would be good levels to take profits. For the timing, I'm still trading with long bias. The 2 calls that I have on the long side are Gas Authority with a stop at 409. I would buy this for targets of 430. And Tata Power as well, keep a stop below 81 and look for 88.5 as the target.
Okay. Rajat Bose also joins in. Good morning, Rajat. What are you trading?
See, I'm trading 2 stocks. They're already moving up. One is BEML. BEML, I would now raise my stop. Earlier, I put it at 1864. I think now it should be 1875 or so. And I'm looking at 1908 and say after that 1922 on the upside. And the second stock that I personally hold in my portfolio, that is United Spirits, I'm looking at targets of 2725 and 2745. Second target I have raised because the first target has already been met, and my stop loss would remain at 2680.
Okay. Ashwani, thoughts on State Bank? The feedback we're getting is that the SBI Life grey market premium has been coming down and the stock's been sulking a bit. Is there a trade on SBI?
you know, it gives a very bad feeling that if this is the response pre the IPO, once the IPO is out of the way, generally, you know, stocks tend to go stronger into subsidiaries listing. But it's definitely trading below its 200-day moving average, which is about 280, and consistently making fresh lows. So there is clear distribution, and you know, strong hands are selling into SBI. I think in the next few months we could get as low as maybe 235, 240 on SBI.
All right, gentlemen, thank you very much for giving us your 10 a.m. trades. The market at an index level holding flat, but some of the sectors, some of the stocks like Tata Motors, Biocon, doing well at this point in time. With that, let's shift to the IPO market. There is a big insurance company that's going to list. Insurance growth trends have been strong across the life insurance sector. Private players are gaining market share, and LIC appears to be showing some signs of slowdown. At least the August numbers seem to indicate that. Arijit Basu, the Managing Director and CEO of SBI Life Insurance, and Nidesh Jain, the analyst at Investec Capital Services, join us now. Good morning to both of you. Mr. Basu, first you, how have been insurance trends? We had a report on the August numbers, and it looks fairly strong across all private sector players.
That's right. I think the entire financial year 17-18 has been good, and August numbers have continued in that vein. And for SBI Life also, the numbers have been very good, and we are continuing on the growth path that we have been seeing for the last 3 years.
Mr. Basu, morning, sir. I mean, of course, all eyes as the issue gets underway. So I just want to sort of get a sense, and I know maybe you can't give us too much of guidance ahead of that, but the kind of growth that you've seen, it's been phenomenal in new business premiums over the last 1 or 2 years. Those kind of levels, 30% plus, is that a sustainable run rate for SBI Life?
Good morning. Yes, we would like to believe that that is the case because we have been able to do it consistently now for almost 3 years, not just 1 year. In fact, 16-17 was overall good for the industry, the private industry, but we grew at 39% in individual rated premium, significantly ahead. But we had done the same in 15-16. So I think what is driving this for us is the fact that SBI Life is uniquely positioned in the sense that we are doing well in both the major channels that we have, the agency distribution or the individual agency, where we again are growing at around 20%, which is about double of the general industry growth in this channel. And in bank assurance, you would be aware that the potential that is available in the State Bank group is immense. And while State Bank had been picking up on cross-selling, and we were seeing a 15-20% growth for quite some time, you know, it's not recent, say from 2007 onwards. But I think the potential is much higher. That realization has come in both sides, both SBI and SBI Life. And we have therefore taken a lot of steps to ensure that this potential is realized. But even today, if you consider the number of policies that we have sold or are selling in a year, they are significantly lower than the potential which is available in the State Bank franchise.
Okay. Let's get an analyst as well on that issue then. Nidesh Jain is with us. Nidesh, good morning. Your thoughts on the space and SBI Life, I mean, how does it compare with, say, an ICICI Pru?
Yeah, so space is definitely looking very, very attractive. This is the third year when private sector players have posted double-digit new business premium growth. The sector, if you look at the last number, last year the sector have grown at 26% on a YOY basis. This sort of growth rate has actually been unheard of in the life insurance sector across the globe. And even in India, we have seen this growth only after 7-8 years of either decline or low single-digit sort of growth for the sector. So sector is looking very, very attractive from our investment perspective. Within players, SBI Life enjoys a significant advantage in terms of very, very underpenetrated bank insurance channel. So we did an analysis and we find out that only 1% of State Bank of India customers have been sold a life insurance policy in last 5 years. This number is 10% for HDFC Bank. So even if this 1% becomes 2% or 2.5% over next 3 to 5 years, that will give a 25 to 30% growth to SBI Life. And this sort of growth visibility is, I think, is not visible in any other private life insurance company in India. So from that perspective, SBI Life is very, very well positioned.
Okay. Mr. Basu, what is the 61-month persistency ratio?
So for us, it was 67% at the end of 31st March 2017. And I just wanted to mention that as well, because the previous question related to top-line growth. But I think investors are looking favorably at our company, not only because we have done very good top-line growth, but at the same time, we have managed to do very well on all the quality metrics and are significantly sort of outperforming or doing better than our peers. So whether you take it in terms of persistency, renewal, the cost ratios of SBI Life, they are significantly lower than any of the larger companies. And even quality customer metrics like mis-selling ratio and so on and so forth, a lot of importance is being given. So the last 3 years or so for the company has been good, not only in terms of quantity which is required, but I think that alone would not have sufficed for the company as a whole. And we have been doing extremely well also in terms of the quality of growth and the risk management practices that we have.
Mr. Basu, sir, I believe the proportion of market-linked products in your portfolio right now is almost 50%. What is the plan going forward? Do you envisage a greater return to, let's say, traditional products? And what will that mean for future profitability trends?
Yes, our product mix had ULIPs of up to 50% as at the end of 2017. Now this is the proportion of ULIPs increased primarily because we were not able to reach out to HNIs and affluent people to the extent that we could have in the past. And HNIs and affluent, there is a demand more for market-linked products than the traditional savings. Now, having said that, as you know, our reach is across the SBI franchise, and even the agency channel, as I said, is doing very well. So we expect to do well across all the customer segments in terms of income. And therefore, we feel that perhaps on an overall basis, our ULIP share should be somewhere between 40 and 50, and say around 45. There are two things about ULIPs. One is, yes, the margins are a little lower than the company new business margin last year was 15.4, and ULIP margin was at around 10%. However, ULIP persistencies also have tended to be better for us. So ULIP 13th month persistency has been as high as 85%. Okay. So it's a risk as also it's a good thing for us. And most importantly, we actually sell depending on customer demand. So given all that, I think the ULIP percentage may not be 50%, but will probably be somewhere around 40 to 45% even in the near future.
Okay. Well, there could be an argument that your market cap to embedded value is higher compared to one or two listed entities. That is all we can compare you with. You're aiming very high.
So the valuation or the price band that was fixed was based on the investment bankers who are leading the issue, the feedback given by them. And as you know, the process is that we have met a large number of institutional investors who have looked at not only the growth aspects of SBI Life, but also at the quality of the book and across all the parameters, some of which I shared. And the embedded value to the market, the valuation as a multiple of the embedded value as on March 17 is just over 4. And if you see the only other listed company, they are just under that. So it's fairly comparable. And perhaps the fact that we are a little ahead in terms of cost, which is considered very important in terms of profitability, and also in some of these quality metrics, has played a role in arriving at this price band.
All the very best to you, Mr. Basu. But last question to you, Nidesh. Generally market cap to EV is high for the other listed players as well, and the aspiring listed, we don't know, of course. Would you worry that the markets are running away with their enthusiasm for insurance companies?
Yeah, so if you look at the entire financial services space, and if you compare price to book and look at a surrogate of price to EV for insurance companies, I will say that insurance companies are just fairly valued. They are not at the extreme end in terms of valuation. If you look at some of the NBFCs, some of the banks are trading at more than 4 times price to book. And mind you, these insurance companies does not have any risk on the asset side. Without any risk on the asset side, they are expected to deliver a embedded value growth of 18 to 20% over a very long period of time. This sort of visibility and this sort of lowest risk sort of framework is actually not available in the entire financial services space. So 3 times price to EV on a forward basis, I will not be very concerned on valuations.
Fair point. Okay, that gives a green signal, a clean sheet